heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Ed Ludlow here in San Francisco. Caroline Hyde is off today. This is Bloomberg Technology. Coming up on the program, full earnings coverage ahead as Uber reports a surprise operating profit but misses on revenue estimates. We sit down with CEO Dara Khosrowshahi. Plus, we'll look at competition in social media as Elon Musk's X tries to become an everything app. We'll discuss with the CEO of StockTwits. And we'll get a read on private markets and the state of venture capital with our VC spotlight. Dina Shakir, of Lux Capital, joining us. Quick check on the markets first. This is the technology corners of your equity markets. Nasdaq 100 softer by 0.2%. We're kind of treading water at the moment when it comes to the tech sector. Think about that 2% gain we had on the Nasdaq 100 last week. Some weaker earnings are driving the narrative. Underperformance in the US listed shares of Chinese technology names. The Nasdaq Golden Dragon Index down 1.7% as we continue to gauge what's going on in the Chinese economy, particularly as well from the regulatory standpoint and the Chinese government's attitude towards some of those Chinese tech players. And again, Bitcoin now actually below $29,000 per token. It's traded for the last 10 days or so in this kind of narrow range between $29,000, $29,500 per token. No real news catalyst or news flow driving what's happening in that cryptocurrency, one of our favorite risk assets. In the earnings story in the single name movers, there's just one that we're looking at, and that is Uber. For the first time, an operating profit on a GAAP basis. This is something that the world's been waiting for when it comes to Uber. The question, would they ever be profitable? Well, they are. Even so, the stock down almost 6%, on track for its biggest decline since October. The concern from the street seems to be about growth, but the numbers in the quarter just gone were good. Let's get more on Uber's results and bring in Bloomberg's Jackie Davalos out of DC, covering everything gig economy, everything in the apps. Give me the main numbers with Uber, because by all accounts, on every metric, whether it's a demand-focused or a supply-focused metric, Uber did well.
Uber used to be known as the poster child for money-losing unicorns in Silicon Valley, and this quarter really put a lid on that. You had net income of $394 million. It's not the first time that it's posted a net gain, but what's different this time, Ed, is that a lot of that came from the underlying business, not just positive swings in its equity stakes. When you look under the hood, those were trip volumes in its ride-hailing business, which were at all-time highs, finally recovering to those pre-pandemic levels. You also had delivery demand at all-time highs, people using the app to order takeout more often with bigger basket sizes. And then on top of that, you have other business lines like advertising, subscriptions finally rising to a point where it's making a dent in how much demand the company is bringing into the app. Now, like you said, the street wasn't totally convinced that the numbers are there long term. You have positive bookings for this quarter. They rose 16%, but at the same time, there's a little skepticism that they can keep this run going, especially when macroeconomic headwinds are looking to be a little bit of a challenge for some other tech players.
The story, very good summary, by the way, of the numbers, but the story is that people are willing to spend on ride-hailing. They're willing to spend on food delivery, despite a tougher economic environment. But the bar is so high now for Uber going forward, right?
That's exactly right. They've made steps over the past few years, and really difficult ones at that. If you remember where they were during the start of the pandemic, massive layoffs, they hived off unprofitable units. They've really been preparing the business for a business that isn't relying on artificially low pricing. And now you take a look at what its growth drivers are going forward. It's going to rely on, is the app fun to be on for users? Is it useful not just for takeout and delivery, but also what are some of the other ways that it can snag some of that attention? It's going into chartered buses. It has, Uber Boat in Mykonos, Greece, for example. So it's really looking at any other ways it can tap growth, and it's been effective so far. But at the same time, that delivery demand is starting to taper off a little bit. You have DoorDash reporting tomorrow, and I think investors are looking to see just how resilient that is, because that is a growing part of Uber's overall business.
Jackie, the other piece of standalone news is that CFO Nelson Chai will step down effective January 5th. I think that confirms your reporting from earlier in July. What did the company have to say about that?
Only positive things. Nelson has had an amazing run at the company. He really cleaned up the Uber's balance sheet from when it first IPO'd and to now. So this quarter is really kind of his victory lap of sorts. The company said they're looking for another replacement, but he's going to stay on board until January 5th of next year. So investors can stay assured that that discipline and the execution is still going to remain in the months to come.
All right, Bloomberg's Jackie Davalos out of DC. Thank you very much. Let's stay with Uber. Wedbush is out with a note reacting to earnings that calls Uber CEO Dara Khosrowshahi the comeback kid. The CEO is leading a, quote, comeback for the ages at Uber. Joining us now, Dan Ives, Wedbush senior equity analyst, who has an outperform rating and $52 price target on Uber. The comeback kid. Why do you say that, Dan?
Go back 18 months. As you know well, back was against the wall. And now you look at growth, look at profitability and cash flow, especially as little brother Lyft is at the kids' table. They're gaining share. And I think this is just a knee-jerk reaction where we're buyers. I think this is a stock that continues to move higher. An inflection point quarter, Rocky Balboa-like comeback for Uber.
The gross bookings forecast for the current period was slightly ahead of expectations. But there does seem to be a growth concern longer term with Uber. Why don't you share that concern?
Look, they've been able to balance. And strategically, if you look at rides, you look at mobility, you look at what's happening ultimately on the food delivery business, I think actually numbers continue to be conservative. And I think the key here is that the street doesn't get ahead of itself. They're not going to continue to raise guidance, maybe as dramatically as some of the investors thought, which is why you're seeing a knee-jerk reaction here. But I think that's the game for them. Under-promise, over-deliver, balanced growth going into 2024. And I think it's one of the best risk-reward disruptive tech names out there with this comeback story being led by Dara.
You go back to February, and that guidance you're referring to is adjusted EBITDA of $5 billion in 2024. Even if not dramatic, were you surprised they didn't revise higher even a little?
I think that's the right poker move. In this macro, still some volatility going the second half of the year. Want to give themselves wiggle room. I still think that that's beatable. But if you look at the execution story, not just talking the talk, walking the walk, and I think many of the bears that have been skeptical have been proven wrong. If you look at the last few quarters, and even you go back last year, I think this is really now what I'll call a next chapter of success for Uber that's starting to play out.
Long term, what is the picture for Uber? You called Dara Khosrowshahi the comeback kid, but that comeback's happened. How does he lead this company into the next 5 or 10 years?
I think ultimately down the road, it's going to be autonomous is going to play a role, where I do see them potentially doing more and more things with Tesla. Just when you think about from where that ultimately is going from a technology perspective, I think freight is going to be something where they're going to add more into from a resource perspective. And then ultimately just penetrating the consumer more and more. I think that's really going to be the goal. That's the golden goose for Uber when you think about where they're heading.
I think Dara Khosrowshahi was saying earlier this morning that they see a world of true autonomy being 7 to 10 years away. Does that signal any complacency to you, that they're not investing and focused on it now?
Again, what they say and what they're actually doing are two separate things. I do think strategically they are going to be focused on it, but I think it's going to be more through partnerships. Because yeah, the last thing you want to see them do is just spend money like 1980s rock stars like they were doing 2-3 years ago. I think it's about balanced growth here that continues to sort of play out. It's hard to poke holes in the story. You have knee-jerk reactions here, just like we've seen with some other names, but we're buyers here. I think this is a stock that ultimately gets into senior citizen type level as we go in 2024.
Yeah, Dan, we've been talking a lot here on Bloomberg Technology about the idea of an everything app. And Uber seems like as close to an everything app as you see in Southeast Asia, for example. Do you see a future for them where they offer a broader range of services and products?
Look, I think that's definitely one of the potential paths. But as we've seen, with Grab in Indonesia and throughout Asia, we've seen it with WeChat. It's easier said than done. And I do think Uber right now, that is maybe a broader plan. Of course, that it's a plan for Twitter, formerly and now known as X, in terms of Musk's overall strategy. But Uber needs to make sure that they build this out the right way and don't just try to be all things to all people. And I think that's right now the balance that Darry's striking. But finally, adults in the room running the company, and investors like what they see this year.
Dan, looking ahead to Thursday, the big one, Apple reports its earnings. What are you expecting from the iPhone maker?
Get out the popcorn. I mean, they continue to I think, beat expectations in China, which is the hearts and lungs. This is the drum roll, as Gurman talks about, the iPhone 15. I think the stock that continues to re-rate higher in services as it marches toward that $3.5–4 trillion mark, despite many yelling fire in a crowded theater this year.
I look at MODL on the Bloomberg terminal, the estimates that we're compiling, and the only area of sort of year-on-year top-line growth is services. Where's your head at with Apple's services offering right now?
I think services starts to now uptick toward double digits as we go into fiscal 24. I think some of the parts, that's worth 1.3 to 1.4 trillion. And this is all the drum roll to a re-accelerating growth story despite the macro. And that's what's happening at Apple. I think when you think about it, it's also the margin story. You're seeing ASPs lift. It's another example of Cook playing chess while others play checkers.
All right, Dan Ives of Wedbush calling Uber CEO Dara Khosrowshahi the comeback kid. Stay tuned later on in Bloomberg Technology when Uber CEO Dara Khosrowshahi joins us here on the show to discuss those results. Coming up, Elon Musk's X goes after a non-profit. Why the social media giant is throwing the books at a group that monitors for hate speech. That conversation coming up next. We're also watching shares of both Pinterest and Electronic Arts, both names reporting after the bell. Pinterest, the expectations pretty low. Little change in monthly active users from the prior quarter. Muted user growth is what Bloomberg Intelligence had expected. Contrast that with Electronic Arts, the stock trading flat ahead of the numbers. Lots of focus on Star Wars. Star Wars, Star Wars, and more Star Wars. This is Bloomberg Technology. Elon Musk's X Corp sued a non-profit group that monitors online hate speech, accusing it of falsely describing the social media platform, formerly known as Twitter, as being overwhelmed with harmful content. In the lawsuit filed late Monday in San Francisco federal court, X Corp claims the Center for Countering Digital Hate is illegally scraping its servers and cherry-picking objectionable posts as part of a, quote, scare campaign to drive away advertisers. We will continue to track that story. Now, for more on the Everything app, the battle for social media dominance, we're delighted to be joined by Rishi Khanna, StockTwits CEO. And I find this so interesting, Rishi, because at the core of the idea of an Everything app, as outlined by Elon Musk and Linda Yaccarino, the CEO of X, formerly known as Twitter, it's adding data, financial services, and that's creeping into your domain a little bit.
Yeah, I mean, I think it's easier said than done. First of all, thanks for having me on. But yeah, I think, an Everything app is beyond just adding, the features. It's about engaging and creating a space that, makes people comfortable with doing it. And I'd argue trust is a large part of that space, which makes it difficult. And over the last, 3 to 6 months, we've, seen a tough time of Twitter establishing or X establishing, maintaining trust with its community and user base.
StockTwits is a platform where you have data, but you also have the opportunity to comment, share live quote about the markets. Do you see that being able to be replicated on X, which already has the comment part, just not the data part?
Yeah, I mean, obviously we have the community aspect of it, as X does, and they have that commentary. I mean, we came up with Twitter 14 years ago and have built our community organically over the last 14 years. I think it is, we've seen experiments with X adding, charts in partnership with other vendors and providers, and I think that's something they could do. But I'd argue, in certain verticals, there's much more depth than just data that is demanded by the community and users to really make it a valuable verticalized app. I think finance and investing specifically is a great space for that, and that's the space we're in. I think it's more than just adding data. It's the context and being able to focus on that context for the community as your product roadmap, as your strategy entirely, which is much more than I think where X is at today.
Rishi, we've been speaking with you on Bloomberg Technology over the last 2 or 3 years in the context of meme stocks.
Yeah.
But the idea that something is trending or a point of discussion on social media platforms in the context of specific names, do you recognize X, the platform formerly known as Twitter, as a place where those conversations are still taking place or where they originate from?
I think that absolutely the conversation is still taking place. The conversation has taken place on X, formerly Twitter. It's taking place on StockTwits. It's taken place on Reddit. The conversation is more than just any one platform, but I do think you're seeing an erosion in the trust on X today, right now, where it's tougher to find the conversations. I know, from speaking to many people, their experience in the discovery of the conversation has gotten harder, just with the algorithmic changes and whatnot. And so I think that's the opportunity for other platforms, whether it's a Threads or whether it's us at StockTwits, to kind of continue to lean in and make sure that we provide the right kind of space for those conversations. But it absolutely still happens on X.
How does StockTwits lean in then? I mean, is there an opportunity for you to expand the StockTwits offering to become your own everything app?
So I feel like I'm in a board meeting right now. No, it's something we've been very focused on for our vertical. So, last year we actually launched trading right in the app, so through our own broker-dealer. And so, I look at our opportunity to lean in about delivering value across the investing life cycle, from ideation through the research phase, through the execution phase, and into portfolio management. So that to me is the kind of everything life cycle of your investing or trading journey. And so we are filling in the pieces across that strategically. Like I said, last year we added equity trading. This year we'll expand on kind of the execution platform and the kinds of trading you can do, both directly through us as well as through partners, and continue to fill that and lean in there. And at the same time, we're very much leaning into kind of the community side and the social side, and giving better tools to our community, filling the gaps, and tackling the problems that our members have.
Rishi, let's run with that idea. You're in a board meeting. X Corp and Elon Musk have a proposal on the table to acquire StockTwits. What's the chances of that happening?
I would say it's low to quite low in terms of that offer coming. I mean, we've been an independent entity for a long time. I think Elon Musk is a very mercurial, interesting person. I don't know that he's gonna have that appetite for acquisitions or looking outside. I think he has a very strong vision from what he thinks he wants to do from back in the 90s. And so I don't know that, it's coming out and acquiring, StockTwits, which maybe will take over the tweet branding for him since he's decided to let it go.
What's driving the conversation on StockTwits culturally?
Yeah.
Where are you seeing traffic and engagement at its highest?
Well, the beauty of the markets is it's new every day, right? And so, today, right now, in our current, where we're at, it's earnings seasons is in full swing, and we're seeing a ton of, conversation happen around earnings season. SoFi yesterday obviously had, some really great, positive news for their stock, and there was a lot of conversation around that. And we're going into we had some big earnings last week. We're going into some big ones, Apple and Uber and whatnot this week. And so earnings and those kind of kind of market factors are always there. You definitely have that kind of meme stock aspect as well. So Tupperware has been one of these, big conversations over the last, call it 5 days or so, I guess. And so where people are discovering whatever the thesis might be, right? With Tupperware, it's an interesting one, long-standing brand, struggling from a financial perspective, short interest discovered. It has those catalysts that, I've talked about before in terms of what drives or what can create a meme stock. So, the beauty with the markets is there's different catalysts, whether it is a regular thing like earnings or whether it's, kind of news-driven, kind of special report-driven. AI has been a big thing. EV space has been a huge aspect.
Rishi Khanna of StockTwits, it's always good to catch up. Thank you for your time joining us out of New York.
Take it.
Now, coming up, FTX's new bankruptcy plan could mean cash payments for its customers. Bring you that story next. This is Bloomberg Technology. All right, time for talking tech. First up, NASA is listening for any sound from Voyager 2 after losing contact with the spacecraft billions of miles away. Voyager 2 has been out of touch ever since flight controllers accidentally sent a wrong command more than a week ago that tilted its antenna away from Earth. Plus, Florentry Advisors is doubling down on India's drone-making sector after an early bet on the Mumbai-listed company generated a return of almost 600%. The Blackstone alum bought a 15% stake in BotLab Dynamics for about $2.4 million and expects 3 more portfolio companies to go public soon. And FTX unveiled a cash repayment plan as part of its bankruptcy. The draft proposes valuing customer claims in US dollars as of the date it went bankrupt and repaying them by selling assets tied to various silos of the business. FTX hasn't ruled out rebooting an offshore exchange, that all according to filings. Coming up, a big Bloomberg scoop on Tesla, a $100 million plan for a semi-truck charging network. This is Bloomberg Technology. Welcome back to Bloomberg Technology. Ed Ludlow here in San Francisco. Looking at the markets, the index level, the NASDAQ 100, it is the tech-heavy index, softer by 0.4%. The story's been sort of the market treading water. This earnings season, there have been some disappointments. Some of the mega caps have surprised to the upside with focus as well on economic data. And the conversation about a recession, particularly in the US, is now steering toward a soft landing. But there is so much of this earnings season still to go. Away from earnings, we're also looking at shares of Tesla moving to the downside, moving a little lower. But there is some news out of Bloomberg News. EV giant Tesla seeking a $100 million check from the US to help it build a network of charging stations for the Tesla semi-truck. That's according to emails seen by Bloomberg News that outline a proposed trucking corridor from the Texas-Mexico border to Northern California. Bloomberg's Dana Hull broke that story alongside Sean O'Kane and joins me now. Let's take a look at the map. We're talking about a route between Laredo, Texas, up to Northern California. What did you learn about what Tesla's trying to do?
Yeah, so there's a lot of money in the infrastructure bill from President Biden to build out EV charging. And when we talk about EV charging, we typically focus on passenger cars. But if we're going to really electrify transportation in the United States, heavy-duty trucking is a huge opportunity. And it's this chicken and egg thing where, like, we don't really have a lot of EV trucks on the road yet because there's not a robust EV charging infrastructure for the Class 8 kind of trucks that are out there. So Tesla is seeking funding to build this kind of route, basically, from Texas, where they have a factory, to Northern California, where they also have a factory. So it's obviously in their interest to sort of do the route this way. We know that the semi-truck is going to be used to sort of haul Tesla goods internally. And it's also a major trucking corridor. I mean, there's a lot of trucking in Texas in general. So, this is not a done deal. This is Tesla seeking federal funding to kind of do this proposal. But it's just an interesting window into sort of what Tesla has planned and is thinking about. And their policy team has always been very shrewd of taking advantage of any federal funding that is out there.
I think it's 9 proposed sites between Laredo and Northern California, right? It's also interesting south of the border because Tesla has plans for production in Mexico.
Yeah, absolutely. I mean, and you can sort of imagine that Tesla could use this route to ship parts and batteries and goods between its various facilities here in North America. But it's also, the route kind of goes from Laredo through, through the Phoenix area and then Southern California and then up to Fremont. Interestingly, it stops in Compton and in Bakersfield. There's a big kind of push to electrify, electrify in neighborhoods that are low income, and so the Biden administration is very, very aware of the impact of diesel fuel on port communities, on low income communities, and so the cities that are chosen are sort of interesting from that perspective as well.
Dana, you're completely right that the electrification story is just as much about commercial vehicles as it is the consumer car. What do we know about the production plans for the Tesla Semi?
Well, interestingly, I mean, they have been very slow to kind of get these vehicles out. They made a big show of kind of turning over their first vehicles to Pepsi and Frito-Lay, and, that company is definitely using them and piloting them and running them. But in the last earnings report, Tesla, in its deck, said that the Semi is still in pilot production. And so, it's going to be quite a while, I think, before we see these at a massive scale. I think Tesla is still learning a lot. I think the battery size is still a question for a lot of people. Like, how big is this battery? There was a recall earlier this year, so they're still kind of working out the kinks, which is smart, right? You don't want to make a ton of Class 8 trucks and then have to recall them. So I think it's just a very slow process.
All right, Bloomberg's Dana Hall. I really encourage you to check out her reporting as well on what Tesla's doing with PepsiCo. You've been on the ground. The Tesla Semi going to be a big story going forward, but it's in the early stages of its production. Again, as we look at Tesla shares, softer by almost 3% at this point, but seeing a lot of gains. Thank you to Bloomberg's Dana Hall. Another big story, of course, that we're watching is Uber. Earnings out, the stock lower, some disappointment on the street. With that in mind, we welcome our Bloomberg radio and television audiences worldwide. Joining us now, the CEO of Uber, Dara Khosrowshahi, and Bloomberg's Emily Chang with me on set in San Francisco. Emily?
Thank you, and Dara, thank you so much for joining us. It's good to have you back. Look, I think investors are reacting to a bit of a revenue miss, but your first GAAP profit reported ever. Talk to us a little bit about the discipline here and what kind of choices you had to make this happen in this macro environment.
Yeah, absolutely. We're very excited about this. It's a seminal moment for Uber to deliver GAAP operating profit, free cash flow of over $1 billion just in the quarter, along with a really strong top line. You look at a gross bookings growth that was $33.6 billion, up 18% on a constant currency basis. So I think the results, both in terms of the top line and the bottom line, have been second to none and certainly leading in our industry. And it has taken a lot of cost discipline in terms of really looking at making that perfect match between a rider and a driver, or an eater and a courier and a restaurant, and making sure everything in that transaction happens perfectly, no errors, no mistakes, no cancellations, et cetera. And at the same time, it takes a lot of cost discipline in terms of overheads. Our headcount has been flat. And if you look at our headcount compared to 2019, pre-pandemic, our total headcount is up 10% during those years. And our gross bookings in the core business has been up 80% versus headcount growth of 10%. So it absolutely has taken that discipline. But at the same time, the company continues to innovate and gain category position, which is what it's all about.
Now, you formally announced that CFO Nelson Chai will be leaving the company, which Bloomberg reported a few weeks ago. What is the interim plan, and what are you looking for? Will this be an internal hire, an external hire?
Yeah, so Nelson is going to be staying with us really through the balance of the year, up until early January, to make sure that we have a smooth succession plan. The next CFO is in seat and can be coached by Nelson as well. And really what I'm looking for is another partner like Nelson. You know, Nelson came in at a very difficult time and teamed up with myself and the rest of the team, taking us through an environment of deep operating losses, taking us through the IPO, getting us a really strong balance sheet so that we could come out of the IPO and could deal with issues like the pandemic to where we are now, which is a leading company. The next 5 years of our journey are about scaling and becoming that true global platform that can grow top line in a 20% range, can continue to innovate, and continue to drive the kinds of margins and the incremental margin growth that we've been driving historically. We told investors that incremental margins as a percentage of gross bookings growth will be 7+%. And consistently, we've come in above that because we've been innovating, but at the same time, been disciplined at the bottom line. I'm looking for a partner who can deliver kind of the next chapter of our growth, just like Nelson did, Uber 2.0, so to speak.
So let's talk about the executive suite, the broader executive suite in that next chapter. Your CTO left back in 2021, was not replaced. How are you thinking about that role? Is there anyone particular in mind?
We actually, our tech team is led by 3 different leaders. Sanjeev Jain, who's our chief product officer, really thinking about the rider app, driver app, eater app, et cetera. Gus Foldner, who's thinking about the core services, customer service, safety, insurance, et cetera. And then Albert Greenberg, who runs the infrastructure. You know, we are at a core a technology company, and instead of having 1 tech leader, we have 3 tech leaders, and that team has come together to drive outsized innovation. When you look at driver upfront fares, when you look at our Uber Teens product, when you look at taxi, hailables, low cost, our entry into new verticals, there's no company in the industry that's innovating at our speed or scale, and it's thanks to the tech leaders that we have in-house at this point.
To our global radio and television audience, you're listening to our conversation with Uber CEO Dara Khosrowshahi following that earnings print. You know, Dara, a look at the quarter gone. Number of trips, gross bookings, active drivers, demand and supply side, all at records, strong gross booking forecast. Why wasn't that enough to kind of raise expectations for adjusted EBITDA next year? You'd said in February, I believe, it'd be around $5 billion.
Well, I'm not a stock analyst. I can focus on running the company. And we guided for Q3 adjusted EBITDA well above street estimates. We guided for $975 million to $1.025 billion, which was a substantial increase versus expectations out there. And consistently, if you look at our track record, we've put out targets. We've consistently beaten those targets, you know, by anywhere 5, 10+%. And we intend to beat that $5 billion target, just as we've beaten every single target that we put in front of our investors. So we think continued discipline, execution, strong top line growth, increased margins, and more of the same along with innovation is going to get us well beyond the $5 billion.
The innovation piece really interesting. I liked Emily's question about the tech leadership. Em's been all around San Francisco in a cruise. I've been all around San Francisco in a Waymo, and I appreciate for our audience around the world, jumping in a robo-taxi with no driver is not yet a reality. But for lots of people that I asked on Threads, Twitter, LinkedIn, that's their question for you, Dara. When is Uber going to take that fleet of autonomous vehicles as more of a priority?
Well, we are very bullish on autonomous. It's taking time. We have to make sure that the technology is safe. And we're partnering amongst all of the significant verticals that we have. One of the unique aspects of Uber is not only are we global, not only are we the largest platform with the biggest audience, 137 million consumers coming to us every single month, but we operate in every significant vertical for autonomous: passenger vehicles with Uber, delivery, food and grocery delivery with Eats, and then freight as well. Autonomous trucks are absolutely going to be a big part of our future. And if you look at each one of those verticals, we're partnering with leading companies. Waymo, for example, in passenger vehicles, Nuro and Serve, amongst others in delivery, and then in trucking, of course, Aurora, with which we have a strategic investment as well. So we absolutely believe that autonomous is going to be part of the future, and we are working to expose our leading marketplace to autonomous technology as it develops in a safe, efficient manner.
Well, speaking of another kind of technology, artificial intelligence, Instacart's now out with a chatbot, DoorDash as well. Is there an Uber bot in the works?
There's definitely going to be an Uber bot in the works, but I tell you that we have been working with machine learnings, artificial intelligence systems, deep learning systems for years and years and years. Every time you get matched up with a car or get matched up with a courier, there are ML algorithms that are making that match. The pricing that happens, time and day and distance, all of that is driven by machine learning algorithms. So that has been going on, and those algorithms only get better, and the data sets that we work with are the largest data sets globally. And the more data we have, the smarter we get, the more personal we can get. We're now focused more on productivity applications. So, for example, introducing GitHub Copilot for our developers, or helping summarize situations for customer service agents so that they already know context of what's going on with a particular customer and how they can help. We will absolutely put our AI agents out there to help the consumer, but also don't forget about the driver. Drivers who are driving on our marketplace, they also want help. Where should I go? What ride should I accept, et cetera? So we're also working on AI to power drivers and couriers so that they can make smarter decisions every day to be able to earn flexibly, but to maximize their earnings based on their time.
So hang on, just to double down there, is an Uber chatbot something that you're working on right now?
We're working on it right now, absolutely. But it's a very, very small part of the AI ecosystem at Uber.
Our global radio and television audience is listening to Uber's CEO, Dara Khosrowshahi. Dara, Uber is as close as anything the US and Europe has to an everything app, something akin to what you might see in Southeast Asia. So I'm curious how closely you're paying attention to your crosstown neighbor, Mr. Musk, and what X is doing with an everything app.
It's difficult to take your eyes off of what Musk is doing or read about what Elon is doing. And we do so because we want to learn and listen. It's pretty fun. But we are leading in terms of building out a super app. Remember, too, that in Southeast Asia, we have a very significant strategic investment in Grab. Grab has mobility, delivery, payments on their app. Careem, in which we have a big investment in the Middle East, same thing, mobility, delivery, payments as well. So we're very, very familiar with the super app concept. And in the West, I do think Uber is the closest to achieving that super app. We want to be that operating system for your everyday life. Wherever you're going, whatever you want to get delivered, Uber is going to be there for you. And I think that we are steadily moving along the super app path, which is why we're gaining category position against our competitors, both in mobility and delivery, while delivering margins and being profitable as well.
Curious if freight is part of that super app plan, Dara. I mean, even you pointed out today that, that is the weakness in the business. It does seem to be a drag on the business. What's the plan there? To sell it, to spin it off?
Well, the plan is to build at this point. So freight is absolutely suffering from the same kinds of trends that you see in terms of delivery of things, and retail generally is a bit weaker than spend on services. You saw Yellow, for example, big trucking firm, go out of business yesterday. There's a lot of difficulty in terms of freight, in terms of freight rates, and freight is fighting its way through that. But we continue to innovate. Even today, the way that shippers connect to truckers is incredibly outmoded. There's a lot of paper. There isn't much data. The pricing, the routing, et cetera, is based on technology that was built 20, 25 years ago. As we continue to innovate and as we continue to focus on algorithmic pricing, making that perfect match between a shipper and a trucker, we think over a period of time we can build an asset of great value. So at this point, it's heads down. The team is executing in a tough environment. Our losses are decreasing. We think the second half on a bottom line basis is going to be significantly better than the first half. And next year, we're going to get back to growth.
All right. Our thanks to Bloomberg's Emily Chang in that conversation with Uber CEO Dara Khosrowshahi. More ahead. Stay with us. This is Bloomberg. Quick piece of news. Atos is in talks to sell a legacy division to a private equity firm run by Czech billionaire Daniel Kretinsky. The company plans to negotiate $110 million in cash and transfer 1.9 billion euros in debt to the buyer. The proposed deal follows months of struggle for the French company after its IT outsourcing business was slow to adapt to the cloud. All right, Lux Capital raised $1.15 billion in April to invest in startups focused on science and so-called deep technologies such as artificial intelligence, robotics and biotech. Here to tell us more about how it's going, Lux Capital General Partner Dina Shakir. I want to ask you one thing first. There's a dislocation right now between the backward-looking data and all of the news headlines on this program about new funds being raised. It seems like the environment's pretty good right now.
It depends on how you look at it. There certainly is a lot of dry powder out there. Funds like ours are eager to invest in the cutting-edge companies, especially in AI, but across lots of categories, including healthcare, which is where I spend a lot of time.
Yes.
And we believe this is going to be one of the most exciting vintages of companies to be born yet.
How quickly have you got going then since April?
We've been very active. We've been announcing new deals in the AI space, in bio. We're investing in healthcare, more news to come there. So we've certainly been deploying. The pace of capital is not quite what it was at the height of the period of exuberance, and we think that's probably a good thing.
I know you as someone that's kind of deeply pensive, well connected in global Silicon Valley, for want of a better expression, but on the other side of the table, where's the energy? Are there founders that are starting businesses in the space you care about? Are they trying to kick down your door for a check?
Ed, to be a founder is somewhat irrational, right? You have to have this sense of optimism. And to be a founder in this environment, you have to be even more resilient, have even more grit. It is amazingly inspiring to see the founders that are coming to the table, to see the companies that are being born out of academic spin-outs, to see incredible talent that has been laid off or otherwise unleashed out there building new companies. So we are seeing amazing talent. It's certainly not easy, but that's why we believe they'll be even more successful than generations prior.
Digital health was quite interesting in the first half of the year. We've just entered the second half. I think it's something like $6 billion, 250 deals or so. How does the second half look in that space? I know it's an area that you're focused on as an individual, but broadly, how does it look?
Yeah, if you look at the data in digital health specifically, you'll see there were quite a few deals done, but a lot of them were done by existing investors. They were rounds that were otherwise unlabeled, many extension rounds, companies really kicking the can down the road before raising a new round at a new valuation because the valuations haven't quite caught up to where perhaps investors think that they should be. At some point, those companies are going to have to raise again. And I have to say, despite all of these headwinds, there are some categories like women's health, where, as you know, I spend a lot of time, that are actually continuing to see lots of activity and lots of interest.
The Lux Capital thesis is basically to look at corners of the market that have been overlooked to this point by investors. But just explain to the audience why that translates to an opportunity as an investor.
Absolutely. So we say we like to believe before it's obvious, and that's really what any good investor wants to do. Otherwise, you're paying a hefty price when everybody already knows it's a good investment. So women's health is one area where we have been doing that for quite some time. We've deployed over $100 million into the space, into companies with a combined valuation of over $8 billion. Of course, there are later stage companies like Maven, whose Series D we co-led, as well as earlier stage companies, including ones that will be coming to light in a few months, that we've actually helped incubate. We're looking at fertility. We're looking at companies that are prolonging ovarian longevity and delaying menopause. We're looking at companies in family health, in the pediatric space, really across the board. This is an area that represents not only half the population, but women control over 80% of the dollars in healthcare. So we think it's a massively underinvested and undervalued opportunity to create value.
Dina, quickly, where geographically is the innovation happening in this space?
You know, it's interesting because we are in a post-COVID world, so we're still seeing it all over the place. So definitely the coastal areas, you know, Lux itself is bi-coastal, so we see a lot of energy in New York, a lot of energy in Silicon Valley, but we're seeing innovation come out of Europe. We're seeing it come from various other places around the country, and you know, hopefully more to come from elsewhere.
Lux Capital General Partner Dina Shakir, it's so good to catch up here in person in SF. Thank you. All right, a quick time for going viral, which James Donaldson is no stranger of. Better known as MrBeast, the globally followed YouTuber has more than 170 million subscribers to his channel, making him the most subscribed individual on the platform, the second most subscribed channel overall. In 2020, MrBeast partnered with Virtual Dining and began selling burger and fry combos, tapping restaurants and commercial kitchens across the country that were experiencing downtime due to the pandemic, also known as ghost kitchens. Now, the YouTube star is suing his partner, saying the company sacrificed quality in its bid for rapid expansion. Beast Investments sued for breach of contract, asking a federal judge in Manhattan for the right to terminate his business relationship with Virtual Dining Concepts, a Florida company co-founded by former Planet Hollywood executive Robert Earl. Anyone out there on social knows MrBeast, and we will continue to monitor that story. 2 days in, that does it for this edition of Bloomberg Technology. My goodness, what a week we have in store. Don't forget, you can recap everything from today's episode on our podcast, wherever you get your podcast. But we're on Apple, Spotify, iHeart, and of course, all of the Bloomberg platforms. We are in the depths of big tech earnings season. Uber, the story of the day. Later to come this week, Amazon and Apple. From here in San Francisco, this is Bloomberg Technology.